Despite the banking sector's stability and adjustment to the domestic debt exchange impacts, there is a persistent issue of high non-performing loans. As the industry approaches the end of 2023 financial year, banks are enhancing profitability by investing in lucrative short-term Bank of Ghana and government instruments. We have more in the following report by Neil Lati.
Basically, banks are now sound, liquid and profitable. With regulatory reliefs, the capital adequacy ratios of the sector stayed above the minimal regulatory requirement, with the majority of banks carrying surplus of liquidity. The banking sector has shown some resilience as the various stress tests on banks' capital pointed to stability. Despite these gains, the ratio of non-performing loans still remains high. On a year-on-year basis, it rose from 14% in October 2022 to 18.3% in October 2023 from the 15.7% recorded in January 2023. It is, however, a marginal decline in the 20% recorded in August this year, but still represents a higher credit risk. But how concerning is this development to the operations of the banks? John Ewa is the Chief Executive Officer of the Ghana Association of Banks.
When you give facilities or you give loan, you have the expectation of taking the money back. And where non-performing loan ratio is at the moment around 20%, it's not good for the banks, it's not good for the borrowers, it's not good for the country. If you compare with our neighboring country, Cote d'Ivoire, Nigeria, we are significantly higher in terms of the stress or quality of the loan book. And as participants within the financial system, we should all be worried that if a borrower takes money and uses all kinds of gimmicks within the judicial system, the court, the lands commission, whoever or whatever state institution has to do something to ensure the bank is able to recover, and that is not done, it goes to the heart of financial intermediation, because you are reducing the capacity of the financial institution from being able to lend to the next person who perhaps may need it even more. We are in a country that we need to support industry so industry can scale their operations and generate employment. If people are taking loans and are not paying back, how do we sustain the lending to industry?